sure my OBS recording is actually getting my audio this time so I can post that. I felt like last live stream was really good. Like, I wish I would have had the audio with that because I think a lot of people would have probably benefited a lot from it. My thought process, at least with that 345 structure, which I'm going to look at a little bit more in this video or in this live stream too. But I wanted to start out on the daily again because this is kind of what we were looking at the other day. Um, the other day we were doing something like this, and it looked like we were flagging above the 21-day EMA, which is in white. The 21-week EMA is down here, which I still feel like it's going to have to get hit at some point, but um, there's no guarantee that it won't continue to go up first before we get some kind of pullback to that. But we broke down below that 21-day EMA in white, which uh, typically is, which a lot of times it's a fake out. If you look back at all these occurrences right here where it broke down below there, it was usually brief. Actually, the last time, well, the time before last when we broke below right here, Elon Musk, tweeted that they bought, and that's really what shot it up above the 21-day EMA, and then it got support and then continued the run. And then we get a tweet yesterday about Elon Musk saying that they're accepting Bitcoin, and so we shot back above the 21-day EMA again, which is a good sign. And so now I'm looking for some kind of bull flag pattern like that. Not exactly sure what the Elliott wave count is, but as long as we're holding above that 21-day EMA, that's really what I want to see. And if we're forming some kind of bullish flag structure like this, I'm going to be waiting to see if we break out of that. And so I don't know if this is going to have to come up and then we get some kind of retrace of this bounce move, and then we come out of that bull flag and then continue to break out like that. If we did that, that would be really nice. That would give a really clear entry, I guess, in my mind, breaking out of some kind of bullish flag structure that has taken so long to form. I mean, it's at that point it would have taken about 2.5 weeks to form, and then break out of that, get support, stand above that 21-day EMA in white, and break out and go higher. So there's no decisions been made on the higher time frame. So for me, it's still just scalping on the lower time frames, because as long as we're consolidating in this in somewhat of a channel, there's really nothing for me to do. You can look at this as prior all-time high that we faked out on. If we can get back above that and flip this trend line right here, that's really what I'm going to be looking for, something like that. But until then, I'm not really worried about anything. I'm not worried about longing on, for swing trades, and I'm not worried about shorting for swing trades, just because this looks too much like a flag pattern, and we're a lot of bullish stuff going on, and we're above the 21-day EMA. So if we did break down and somehow get back below this 21-day EMA, if the 21-day EMA went like that and we were to get back below it, then I would be thinking that we could go lower. But right now it's just really indecisive, like on the daily. And so I'm going to focus mainly on the lower time frames today, because it's just super indecisive right now. So let's go down to I'll do like a 4-hour maybe. I'll have to go a little bit lower than that. So in the last video, we were looking at potentially, A, B, some kind of C. Like, these are all options that I'd looked at for some kind of correction, whether it be a running flat, which doesn't look likely now, because like I'd mentioned in the last live stream, this B and C would have played out already. Like, if we were going to get some kind of running flat like that, it wouldn't chop around sideways this long. So that is out of the question, in my opinion. And then the one that I posted on Twitter was the expanded flat, where we actually take out this low down here. And I don't foresee that playing out now. I mean, this is just taking so long. I mean, if this was bearish, then we would be looking for some kind of two, where this whole structure right here is just like a ABC. Whoops, what did I just do? Let me this. 1, 2, 3, 4. So if we were doing some kind of expanded flat, I would expect this to be like a ABC running flat if this is going to be bearish, which I kind of have a hard time seeing it being bearish at this point, but it certainly can be, where that would be some kind of running flat where you get 1, 2, 3, 4, 5 waves there, and then this breaks down, and then you really get an impulsive wave down for the third, and then a fifth to take out the low, to do an expanded flat, something like that. I don't know. I'm not really sure about any Elliott wave count at this point, just because we've chopped around for so long. I would have expected if this false breakout right here was to break down, we wouldn't have chopped around so long and stayed above the 21-day EMA in white. I would have thought that the C wave, this C wave right here, would look more like the trajectory of this A wave, where it played out relatively quick. It wouldn't just chop around, and so, but it's definitely an option that this could be some kind of wave. Dang it, I keep clicking early on that. This could be some kind of wave 1, wave 2, wave 3, but that would be super bearish, and because that would just, the fact that this is such a big structure right here would kind of project the fact that this would go like much lower, and I just don't know if that's likely in this bull run right now. Initially, I thought that the expanded flat would make sense, but it's just chopped around for too long. I would have liked to see this play out so much faster. But I'm still keeping it in mind. I want to see what's happening. I mean, if this is going to be some kind of really bearish running flat, which I wouldn't say is the case right now fundamentally, you'd be looking for some kind of, you'd be looking for some resistance, like on these fib levels on the way up. Get rid of these. So just for day trades anyway, we can look at a couple different things. You know, you can put trend lines on this now. You have 2 points to pull from. We have nice clean swings to pull from. So the swing high up here, swing low, came right to the 618. It looked like it front ran the 618 this morning, right in here. So I would have been looking for anywhere in this range on the lower time frames. We're on the 4-hour right now. So if we drop down to the 15-minute, we would have been looking in this red box for potential short opportunities. When I drop down to the 15-minute in just a second, we'll look at it. But that's what I would have been currently looking for, because that's the most obvious swing that we have from the swing high, swing low there, that we would be coming into that zone. We could look for confluence on the lower time frames and be looking for bearish divergences on the lower time frames and bearish reversal candles and stuff like that, to be able to jump in to some kind of short or some kind of short scalp or something like that for a reaction out of that zone. And so that's kind of what I woke up to this morning when I came in here, and I jumped into something kind of quick, but I didn't have time to really like look at where we were at and anything like that, so I didn't catch too much of it. I'm going to go ahead and drop down to the 15-minute, because I kind of want to look at like what we did the past day or so. Let's see, do like a 30-minute. So this is what was going on yesterday. Like this played out yesterday, where you know, it looked to me like that was pretty clear, like bear flag, move down, corrective move of that move, and then another impulse, which was 5 waves, and that's what we were looking at yesterday. I had this counted as 5 waves right here, and then basically projected everything that was going to happen from that, where we went up and rejected here, came back down. I actually thought we would have probably broken down more instead of shooting up, but Elon Musk tweeted, so we ended up reversing right here. But that's essentially what we were looking at yesterday. And so one thing that we could look at here is, let me zoom in. If you look at this move, that kind of looks impulsive. You know, you have you have the one, two. This is what we were looking at, I think, in the last live stream. One, two, three, four, five. And then you have the counter trend move, A, B, C, and then we come down out of this and uh, some kind of corrective move. And so you get your first drive down, and then you get some kind of flag pattern that is correcting that. Whoops. Get rid of that. I want you guys to get used to spotting the impulsive moves, the corrective choppy moves, the impulsive moves, the corrective choppy moves, the impulsive moves, corrective choppy moves, so you can make decisions on where you pull pivots from, and when you would expect like another impulse and stuff like that. And so like if you get good at spotting these impulsive moves, corrective, this is all pretty much, it's not the cleanest channel in the world, but this is, and it doesn't really have as many points either, so this isn't as clear of a bear flag. But um, you know impulsive 5 wave, 3 wave corrective, impulsive. If you go down to like a really low time frame, you can probably see that that was impulsive and 5 waves, and then you have kind of a choppy 3 wave, impulsive, like straight shot down, choppy 3 wave, um, impulsive down, and then we've got a choppy 3 wave right into the zone that we were looking at, that I was talking about, that I was looking at this morning. So I don't want to get this too messy or try to confuse you guys, but that's essentially what I'm looking at just from a high level. I'm looking for these impulsive moves, the corrective moves, and I try to, and on the corrective moves and even the impulsive moves, you can put structure on. It's not always clean. I mean, this one was very clean. Like, you should be able to open the chart and just kind of look at this as a bear flag when it's forming. Because when you see an impulsive move, especially coming off of a corrective move like this, where it's kind of channeling as well, then when you get that impulsive move and a like choppy corrective move of move down, you always want to be looking at the fib, which I'm always pulling the fibs on these impulsive moves anyway. So when you get an impulsive move, you want to pull the fib. You want to see if it's corrective. You're gonna always, even if it's not corrective, you're gonna get some kind of reaction at the 0.5. Um, and in this case, it doesn't quite get up to. Oh wait, that was the 618. Yeah, so it gets between the 618 and the 0.5 for that reaction, and then it goes almost between the 618 and the 707 on the next push before you get the follow through down. And so you can see impulse, corrective, which this corrective move of that impulse from that high to low was actually pretty deep. I mean, it went all the way up above the 786, so that was a very deep retrace, which is, it's going to happen, but you can usually expect reactions, just like in this case. If you see like we had reactions at the 0.5, like that's a good reaction for a scalp right there, even though it was only 2 candles. I mean, you get a nice reaction there. You get all kinds of chop around the 0.5618 for reactions. You get a wick through the 618 reaction. All these fib levels are giving you reactions on the way up. They might not give you like the pivot point, but they're giving you reactions, and that's why I take profit so fast when I get in at these 0.5s on the first touch. I take profit super fast because I don't know if it's going to keep chopping up. So I want to like play the reaction, take the profit. It shoots up again, maybe to the 618 like this wick did. I would get in, take the profit as soon as it reacts, and just keep doing that, because sometimes you can make like 3 or 4 trades in a row just playing these reactions on each level on this way up, rather than just trying to hold it and wait for like the turn, because you don't know. It's better to have more confluence to catch the turn on these fib levels. So if I don't have that confluence, I'm usually just scalping the reactions off of them. So that was a really choppy correction, but or a really slow grind up, but it gave you plenty of reactions on the fib levels. And so looking back at this one, it gave you it gave you reactions as well. It went kind of deep into the point 0.5. It didn't give you too much of a reaction on that first touch of the point 0.5 right there. So like you wouldn't have really gotten too much out of that, but by the time it gets close to the 618, you get a really steep reaction. You get another reaction once you get between the point 0.5 and 618 right there, and then tries to push up to the 707, and then you get the reversal. And so yesterday, what I was looking at, the information that I had to go off of when I was looking at this chart was we had a bear flag. We came down out of that bear flag in 5 waves, and one thing I think when we were looking at it, I can't remember. Well, I guess it was the night before, yeah. So yesterday we were looking at this price action. The day before we were looking at like this drop right here. It was a steep drop. I was looking at where you know whenever you get a strong sell off like that, like the 15 or 30 minute is a good one to kind of look at, to wait to see when you get the bullish divergence. So like we broke out of the bear flag, you get a wave 1-2, you get this like really steep drop that is unlikely to just be a 3 wave. It's unlikely for this to be like a ABC, which wouldn't even make sense for Elliott wave. So like if this 1-2 is kind of small and then you have this really steep sell off like this for a 3, most likely you're going to get like a 4 and then a 5, and you're going to make one more low. And when you're looking at that, you want to wait for that bullish divergence to get in on a swing. So like you can scalp and take reactions right here, because if you go down to a low enough time frame, there was actually a divergence right here between these 2 points. So you could have actually played that long on like a 5 minute. But if you're going to play like a longer term swing, you need to be on the 15 minute or 30 minute and look for the divergence there, especially after a strong sell off like that looks like a 3, and you're coming up for the 4 and putting your final low in to give you that divergence. You want to be on the 30 minute because it'll give you more clarity of when this 5 wave is complete and when you have that bullish divergence. And then you can start playing the like using the execution strategies like I mentioned in the last live stream, where I had mentioned in the last live stream on a 5 wave move like this, whether it be up or down. In this case, we're going down. On the 3rd wave, when you see this steep drop, you can assume that it's probably a 3rd wave. You come up for the 4. When you come down for the 5 and make that new low, you can expect anywhere below this 3 wave low when it makes that new low, especially when it looks like bullish divergence is in the making. You can expect you're going to have a pretty decent entry, because the price is going to revert back above this low right here. It's basically, this 5 wave just gives you a false break of the low and you get a reversal, and so that's what you're looking for. And so if you're trying to get in this zone, you could be knife catching, because you don't always know if this is just going to flip this low right here to resistance. Like if this just chopped around right here, flip that to resistance and made one more micro low, like not a more major swing low, but just a micro low to take out that low before it has to reverse. You don't know for sure if it's going to do that, and so it can kind of squeeze you a little bit if you get in too early. And so what I like to do is kind of wait for confirmation, unless you're averaging in, like unless your plan is when it breaks that low right there and you see the divergence forming, it looks like 5 waves. If you go out to like a higher time frame context, you can see maybe there's some support right around here. You can see that you also had a previous low right there, so you can wick that off. So you can see that low right there, there's going to be liquidity below, because it was a pretty major swing where we bounced from. So there's going to be liquidity below that people are, that if it gets driven down, it's going to grab liquidity, and potentially if it flips back above that level, it's likely that it can continue to squeeze everybody out right there. So you could be looking at that level as well. And so I would personally be waiting for some kind of bullish candle to form, which that first green candle is not really bullish. You really want to see like a long tail wick, which this one gave you right here on the 30 minute. If we go down to the 15 minute, let's see what it looks like. Yeah, so you get like a strong reaction right here, and it gets you back above that previous low that we wicked off and put that dash line. So that would give you a little bit more confluence right there because you have the bullish divergence. You just it was just a false break below this level and shot right back above, and then you just retested it on these two candles before going higher. And so that was actually a good opportunity. So you could have gotten in on. I mean, you really could have gotten in on the close of that green candle if you wanted to, and had your stop either below this previous low that we had dashed right there, or below the wick down here, and then do whatever 1-to-1 or use fib relationships where you come from the start of this impulsive move down, so from right here, and go to the low and wick that off, and then you can see that you have the zero 0.5 right here, and that's what we were looking at yesterday. That's what I was looking at us gravitating towards when we were like right in here. I think I was looking for us to gravitate towards that zero 0.5 and give us a reaction. I didn't know if it would be a turning point, but I figured we'd get a reaction there. So entering in here, you can see how all the criteria lined up. You had the lower lows in price, higher lows in RSI, which is a bullish divergence. You get the strong reaction candle that flipped back above not only this low, which was a pretty significant low for that move, it also flipped back above this low on that candle close on the 15-minute. Yeah, you get this correction back down, but you know, if you have your stop below the low here, then you would be fine in this case, and then you can target the 0.5 because you would expect a 5-wave move to give you a move back to the 0.5, or even if you want to be more conservative, keep the 382 on here, just so you can, you know, potentially target the 382. So there's a lot of different ways that you can like manage this trade and execute on it, like where you put your stop, how you enter on it. I don't always do the same thing every time. It depends on the context, which I don't know that I could really go through all that in one live stream, but it really just comes with experience on how you manage each one differently. But I would say just a cookie cutter approach. For me, a cookie cutter approach would be to keep your stop loss kind of loose and shoot for lower risk to rewards. You know, 1.5, 1 to 2, anywhere in there, 1 to 2 risk to reward, because you don't want to get too greedy. You want to try to keep your win rate high, just psychologically speaking. You don't want to have high risk to rewards, but your win rate's like 20%. You know, you're shooting for these crazy trades like that, but you're wrong like 10, 9 times out of 10. So I like to be right 9 times out of 10 instead of wrong 9 times out of 10. That's why I keep my risk to reward kind of low like this. It just helps me like psychologically handle trading, and then that way I can actually risk more too, because I feel more confident in my trades. I'm not, trying to risk. I'm not risking a bunch on something like this that might only work like 15-20% of the time. So I'm looking to keep my risk to reward low. And so that was a really good setup right there. I want you to get used to spotting those where you see these moves down out of you know out of some kind of corrective channel. You get 5 clean waves. You get the divergence. You see context where you flip prior levels that it couldn't break below. You get a reaction. You can enter on those and have tight stops. The other option is to, like I mentioned in the last live stream, is not to try to get in anywhere in here. Don't even try to catch the knife, and try to, especially if you don't have a lot of confidence in it yet, don't try to do anything right in here, because you don't know if you're getting in at the right time or not. You can always wait for the move and then get in on the first retrace, and then you have more confidence because you've had this divergence play out. You're not trying to guess if this is actually going to be the turn or not, because like I said, could just chop around and go down one more time, and the RSI would look something like that. You'd still have a bullish divergence on the RSI, but you would come, way down here, and you might get squeezed out because, you risked too much when you got in right here. Well, you would have gotten stopped out most likely if you had your stop here. So you don't have to guess, especially if you're not 100% sure. Just don't even try to catch the knife. Wait for the move, and then get in on the retrace after this divergence is formed. And so in this case, that's what I was looking at yesterday. yeah, this was yesterday morning. I was looking at this when we came up because I was looking at that as the pivot low. That is a pivot high right there. And so what I was wanting to do is get in when we retrace to the point 0.5. So I was pulling the fib from, zoom in a little bit. I was pulling the fib from the low to there, which was the pivot high at the moment. Once this started coming down, that's when I pulled the fib there. And then I was looking at right here. That's where I wanted to get in. And so that would have been an ideal pullback for me. And I think I even drew it like this. I kind of pulled it over because you can see that we had support kind of all in here. We had this wick down here, resistance broke back above, support. I was wanting to see it actually come down into this range right here, and then that would have been like a beautiful buying opportunity because we were coming off a divergence. We're getting that first pullback into support. Was resistance, flipped back to support there, and then another retest one more time, but we didn't get it, and it ended up getting front ran. So if you wanted to be a little more aggressive, since we did confirm, the divergence, and we got this nice reaction out of here, you could start scaling in at the 382, and and then you're not giving up potential good trade if you're pretty confident in the turn. Trying to get greedy and get in down here in this zone right here, and so that could have been an option as well. And then if you'd have done that, you could have done pretty much the same thing. If you decided to get in, at the 382, which I would just probably say not to do that. I would probably say just to wait, unless you're super confident that it's gonna be the turn and continue going higher. I would just bite the bullet, and if you miss it, you miss it. But I would try to get in at the point 0.5 pretty much every time. Stop below the 707 or 786, and then you target the same thing. I mean, you could target the 382 right here, which if you remember was the fib from this pull, from that high to that low down there. So that 382 you could target, or you could target the point 0.5. Either way, but it wouldn't have got filled on that one, which would have been unfortunate, but it happens. And so, and the other one was every pretty much every pullback. I mean, this pullback I would have been trying to get in at the point 0.5. This move from there to there, just because we hadn't hit the point 0.5 yet, I'm still wanting to buy pullbacks. And so when this pullback happened, I actually bought that one. That was one that I shared yesterday. I didn't hold it. I mean, it was mainly just a scalp. I got out pretty much as soon as it reacted, and we got that green candle right there. But I'd mentioned in there that I thought that it would probably lead to us going to that point 0.5. But I was treating it more as a scalp because I sized up. So I got out pretty much on that green candle, but it looked to me like we still had to realize this point 0.5 up here, and so that's kind of why I was looking at this as getting a reaction. And so you'd have done the same exact thing on this one, having that context in mind, that we had this 5 wave move down, we had the divergence. Most likely we're going to go to this point 0.5. So I'm looking to buy retraces, and so I would have tried to get that retrace. We wouldn't have got it, and so the next one yesterday I was looking at was this one. I pulled the fib from there up to there. Zoom in. So from that low to that high, we come straight to the 0.5, and that's where I got filled. What I normally do is I set some orders like right before the 0.5. I had like I had like I don't know, I had like 5 or 6 orders that went all the way down in case it wicked down below, but 2 or 3 of them were a little bit above the 0.5. That way, if it's going to get front run, especially with me anyway, because on Binance it's like people see my orders or something, and it'll come right to my order, and like I don't get filled. It's almost like they just keep jumping in like right ahead of me, and so it gets kind of annoying and it happens the closer I am to the 0.5. So I like to try to put it above the 0.5, and that way I know I'll get filled, and then I can just average down a little bit in case it does go to the 0.5 or below. That's kind of been the best strategy for me getting in on these, trying to snipe the entry for the scalp. And so in my case, I got in right here, and the fact that it retraced so fast, like this happened, see this, I mentioned this in the last live stream a little bit. The quicker that the retrace plays out, like if this move goes up really fast and you get a really quick retrace to the point 0.5, you're most likely going to get like a wick off the point 0.5, and it's not even going to go down very far. So you can keep a pretty tight stop because you'll get a quick reaction where it'll revert. It has to like revert to the mean because it just happened too fast. It's just a big reversion because it's going up so fast. It's got to come down real quick, and it's just volatile, and then it's got to put in more of a structure like this, and so you can expect some kind of quick reaction off the point 0.5. And so I love looking for those where you get a strong move up and then a real quick retrace to the point 0.5. That's when I like to pile in because I'm usually more confident about the point 0.5 giving me that reaction. And so I got out pretty much on that green candle, got in at the low, got out somewhere in that green candle, and then chopped around a little bit more before going up here to this point 0.5, which we were looking at yesterday as being the potential local top. And so that was one of the trades that I played out, or that I played. Another way you can always keep putting structure on this because this was kind of a corrective. This was, well, not, it doesn't have to be corrective, but it channeled, somewhat well. You can put channels on this whenever you're coming off of a five wave move. It's going to go up in some kind of channel to the 0.5618. You'll get some kind of structure like this. And so once we broke down out of that, you can see that we got we got a move down. And so you can play this move down pretty much the same way, where we would be longing in this case instead of shorting. So we would be pulling our fibs like this from the. Let me get rid of some stuff. It's starting to get a little cluttered on here. So I would have pulled my fib from here, from the low to the pivot high, and then we would be looking for reactions. So we get a reaction in here, which I played. I played that one. So when we got the bounce right in here, played that one. I actually got caught off guard yesterday. I was trying to play a scalp like somewhere in here, and I didn't think it was going to dip so hard to the 382, and I got caught off guard and ended up losing. I don't know. I ended up losing like 15,000, and then I caught that turn and then made it back. So I just stuck with it because I got caught off guard. Wasn't really paying attention either whenever it happened, and had more orders laddered below than I should have, and so I tried getting out somewhere in this chop right here and ended up taking a loss. But I knew once this finally did bottom, it would give me a decent bounce to catch that turn, and so fortunately we did retrace to the 0.5 rather quickly, so I was quite confident that we would get some kind of reaction out of here, and so that's what I played to redeem my loss that I made right in here. But that was a very typical example too. Just like what I mentioned right here, goes up quick, retraces quick, you get a nice reaction. This didn't really go up that quick as a move, but it did go down relatively quick. So you could expect some kind of reaction out of this 0.5618. If you're getting filled anywhere in here off of a big move like this and it goes down that fast and you're getting in right here, you're doing pretty good. Like you're going to get some kind of reaction if you're filled in between the 0.5 and 618, just a high percentage of the time. So if you're in somewhere like that, you could have your stop below the 707 and then do like a 1-to-1 or something like that. And so you'd have gotten a 1-to-1 out of that. You could even tighten it up if you start to see the reaction right here and it doesn't look like it's going to go any lower, like on a 5 minute. Then you can tighten it up and then do a 1-to-1 or do a little bit more than that. And so that's what I love to see right there, this quick retraces of, pretty substantial bounce, quick retrace to the 0.5618. It will give you some kind of reaction to scalp off of. And so that one worked out well. We continued to go lower, and I was actually looking. I wasn't around for this when this low happened, but I was actually wanting to see, some kind of divergence here, which we didn't get. You see how we made a lower low in price? And this went really deep. I mean, it had to go all the way below the 786 before you got a reaction here. And we didn't get a divergence. So, the price just kept going down and down and down. And so if you drop down to like a 5 minute, you probably get a little bit more detail on this drop right here. And so this could have caught a lot of people off guard. That's why I like to play the first reaction. On a quick retrace, I like to play the first reaction out of the 0.5618. Now, if it chops around like this and starts to go lower, you really, really want to be careful of playing any kind of 618 touch or anything like that, because it just shows a lot of weakness. Because if this was strong, we would have come out of this 0.5618 like this. But the fact that we didn't and we chopped around like this, you want to be very hesitant to try to play a 618 after that. You really, at that point, you really want to be kind of picky with your entry, because you want to see something that's going to give you confluence. You don't want to just hop in at a fib like that after we've already got a reaction that was super weak. It didn't even bounce that much, and then it rolled over. You want to wait for more confirmation. And so on the 5 minute, you actually did have some confirmation, because you didn't get the divergence on the 15 minute, but you actually have the divergence on the 5 minute. But as you can see, it would have been even better if between that point and this point on the 5 minute it was a divergence, which it wasn't. You can see right between those 2 points. Hold on, let me do that. You can see between those 2 points it actually made a lower low in the RSI as well with the price. So it would have been picture perfect if that would have been a divergence too, that little micro divergence, and then also the divergence here on the 5 minute. I would have really been looking hard right here, because we were hitting the 786. We get a little bit of a reaction. If that would have been a divergence and that green candle printed right there, I would have went in. I would have went in on that entry right there, and so that would have been a really good sniped entry right there. On the close of that first green candle, if that was a divergence as well, like if we had that little micro divergence in there with that divergence, that would have been great. Because you're pretty confident, because the fact is this is a really strong sell-off, almost relentless. There wasn't much of a bounce even off the 0.5618, so you're expecting some kind of reversion, of this move down. And so I would have really been interested in that. Even without this micro divergence, I would have still probably taken this, maybe just not as much risk. And then if I did that, then I would have been looking for pivot high to pivot low. Take that off. So in this case, you can see we came right to the 0.5. Front ran it right here multiple times, then came through it on a wick. So you could have been targeting right there. And you can see how even on the 5 minute time frame, you can see how this plays out almost the same as the higher time frames. You see that 5 wave move? It's the other thing you can look at. I mean, this works all the way down, but you really need to have context of it though. And then this was kind of I don't even know how to put structure on that, but it was some kind of corrective structure. It was like a triangle that we came out of. 1, 2, 3, 4, 5, broke down impulsively. And so even though this is on a 5 minute, same principles apply to what we were looking at on the 30 minute or 15 minute earlier, where you got this low. Let's see if we got anything else to go off of. There's not really anything back there to go off of, but you got this little micro pullback right here for a 4, and then below that. And that's why I'm saying if this would have been a divergence between these 2 points right here, it would have really caught my eye, and I would have went in bigger if I was paying attention to this. But you don't have to catch the knife right here. That green candle didn't close back above that low, but sometimes you can anticipate. I mean, the more you do this, the better you get at it. And the more you see these play out, you can anticipate the fact that the next candle is most likely going to close above here, and you can just get in on that close and put your stop below here, and then target just a 1-to-1, or you can target 382 or the 0.5 of the move down that we had from up there. Or you can wait for more confirmation. You could wait for that green candle, but the thing is with that, then your risk reward's kind of getting getting worse. You know, like you don't know where to put your stop at because it's going to come down. Like you don't really know where to put your stop at in that case. Your risk to reward gets worse. Um, so sometimes it helps to kind of anticipate, which I would have been a little reluctant to anticipate just because that divergence wasn't there on that 5 minute. But you did have the divergence between there and there on the 5 minute, even though it wasn't there on the 15 minute. So they were kind of mixed signals. But the fact that it retraced without much of a reaction of this whole move right here, and we went all the way to the 786, I would have felt a little more confident with getting in, and it not going too much lower without having somewhat of a bounce, which is what we got. So with that context in mind, I probably would have been looking to take that trade and anticipating this to actually flip that low and this five wave to complete, um, giving us a move back up. So let's see. That was pretty much everything that happened yesterday. Get rid of all that stuff. Um, let's see. I wouldn't have been playing this at all. That like this, all this price action right here was very clear to me. The last few days, like this is all pretty clear. Now that we've come out of here so strong, I don't know that I would have really played anything in this area. I didn't see any. There was nothing super clear to me. I mean, the only thing I can see right here is if you are aware of the Elon pump or the Elon tweet, if you saw it early enough, you could have seen that we were in a bull flag where we had move up, corrective move, channels very nicely. Once we broke that, then we went up impulsively. If you were around and saw the Elon tweet early enough, like as we were breaking this channel, you could have hopped in with relatively low risk because you know a lot of people are going to be getting in. So you could have had a stop below there and then just had a trailing stop, or but that was a very situational type thing with new like a catalyst. I don't trade catalyst very frequently. I'm mainly just trading the chart, but you can see that it was a move up and a corrective move, and so you do if you happen to see the catalyst early, then you might as well take advantage of it because it's breaking out of this bull flagish looking structure. And not only that, um, that was five waves down. So what do we get after five waves down? We should get a three wave up, and so it just looks like we put in a B wave, and now we're looking for a C wave. And C wave normally has five waves in it, so you'd be looking for something like that. And so it looks like that C is complete, at least for now. The count can always change, but that's essentially what I'd be looking for on the way up. And so you could still keep this fib pulled on here from that pivot to there because that was the five wave move that we're correcting in this ABC. And so far we've blasted through we got the reaction on the 0.5. A little bit of a reaction on here, little rejections in the 618, chop around there, chop between the 707 and 786 for that reaction. And so some of the context that you could have used for those levels is in such a strong move like this, when you see a move like that, it's most likely not going to go like this and just come back unless we're in a bear market. In this context, especially after a catalyst like that, I would be waiting for divergences to form. So when I see a move that strong, I want to at least wait for like some more waves to form here. Wait for like a divergence to form, because if this I mean there are divergences right here, but those divergences are in a very strong wave 3ish looking structure. So those are the like divergences that you don't react to. Plus that's on the 5 minute, so those divergences don't exist on any higher time frame. So don't be fooled by these divergences in a strong trend like that, unless you're doing like really quick micro scalps. But for like a more significant pullback of this move, you want to see more significant divergences, like more time in between the divergences. So you have between there and between these 2 points, or really all three of those points, you start to see a more clear divergence. See, between those point and that point, you also get a divergence. So you're starting to get a more clear picture of divergence. So it looks like a 1, 2, 3, 4, and then we're running out of gas here for a 5. And we know that the C wave should have 5 waves in it. Not only that, we're also getting up here to some of these really juicy fib levels. So in this range right here, these are the highest fib levels. These are the deeper fib levels right here that you're going to expect. And so when it looks like we're getting divergence and weakness and 5 waves completed, then you're looking for signs of a reversal. And so this is the one that I caught this morning that I shared a little while ago. I just got in for the scalp. I mean, I didn't really have time to analyze it like I'm doing right now, so I didn't know that we were potentially at a top, or I would have probably held it. But I was looking at what I saw was this right here. I saw between these 2 points right here, I saw the divergence. I wasn't even looking back at that one. I was just looking at these two right here. And that's why I just played a scalp. But if I were to look at the higher time frame or a little bit more context, I would have held it. But I was looking at this right here. See the faults break above the high. Got the divergence, faults break above the high, rejection candle. I got in right here on that rejection candle. I had to stop like somewhere right in there. I got out on the follow through. I did like a 1-to-1. Knowing that we had a more substantial divergence and it looked like we had 5 waves, which I didn't even look at the time, I would have likely held this longer, and I would have been looking for let me take this off. I would have been looking for more substantial retrace. So from there to there, I would have been targeting like the 382 probably, something like that. Because I know even then I still have a really good risk to reward. I wouldn't want to get too greedy. I mean, that's like a 5-to-1. I wouldn't want to get too greedy with the 0.5, but could certainly target the 0.5 as well. And so that one played out really, really well. I wish I would have held it longer. I just didn't really take into account the context of everything at the time. And so, and then of course this is a very prime setup right here, where if you didn't want to get in, it's the same way as we were doing for longs as for shorts. Faults breakout. If you don't want to get in right here, if you're unsure, wait for the acceleration and then just short the pullback. I mean, there's no reason to not do that. If you got multiple bearish divergences, we'll get a strong reaction. We're well due for a pullback because this move went all the way up to the 707, 786 region, which is the red box. Then it's likely that if we get a reaction out of here, it's probably going to follow through a little lower. So just short the first pullback right here after it made that fault to break and to make a new high. It's showing weakness, so pull a fib from there to there. And short the 0.5 to 618. So get in right there. You could get in between there, stop above the 707 or 786. I would do the 7, even right above that high, since it's so close to the 786. You could probably do that, just a tad above there, and then target do 1-to-1, keep your win rate super high, target the pivot low down here. I didn't put that right on the pivot low. So target the pivot low right here, or another one that you can do in this scenario especially, put the -236 level on your fib retracement and target that. So right here, see how we got like a wick out of that? It's usually a reaction right there. Like if there's algorithms shorting, they're going to be covering right here on the -236. Or you could do as I shown just a second ago, pull your fib from there to there, so the full move. And we don't even know, this move might not be done, so you might actually want to pull the fib from there too, because that's kind of where this pump originated from. You might want to do both, pull it from both pivots, so from that pivot and that pivot, kind of give yourself a little bit of a range, and maybe target like the 382, and don't get too greedy with it. Let me pull it down here too. Yeah, so between those two levels right there. So that gives you a little bit of a range to target. And so we could get one more little push down, and that would fulfill that one. And so those are really good setups that have been taking place. I love trading corrections on Bitcoin. I actually have a hard time trading trending markets because it's so hard to manage your risk. Like when the market's trending super hard on high, like every time frame, I end up having a harder time because um, I don't like chasing pumps, but you almost have to a lot of times when it's trending hard. That's why I like when we're in corrections because everything's just fib based. I mean, you just do fib retracements, structure like channel structure, and just be able to uh, roughly spot waves like 1, 2, 3, 4, 5, looking for divergence, ABC, retracing this whole move in an ABC. This C's got 5 waves in it with a divergence up here, so it's perfect, you know, and it went right to a retrace zone of that 5 wave in that red box. And so it's just really easy to read for me in these corrections, and that's why I like the corrective structures on the higher time frame for Bitcoin, because it's just so many opportunities on these retraces. All right, well, I actually recorded this one this time, so I'm definitely going to post it. Has audio with it this time, so this one's going to go on YouTube, and I think this will be really helpful because I talked about pretty much the same thing I did in the last one, but I think the more that I talk about it, I think the more that people will start to catch on. It's like one of those things you just have to hear it, repeat it over and over and over, and it'll just click. And then you know, most of these setups I feel like are pretty straightforward, but you know how you execute them on them is a little different from scenarios to scenario because they're all slightly different, and so you just have to adjust to them. But let me know if there's anything you guys want me to talk about. Like, there's about 7 minutes left, and I'm gonna have to hop off. No, I don't think we're going to 100K next month. That would be pretty crazy if we did. I guess anything's possible though. You know, we're looking at this bull flag right here. Um, I don't even really know what my upside target. Like if it breaks out of here, I have no idea what the upside target's going to be for me. I just do some kind of trailing stop. I kind of mentioned that in the last video. You know, if this is going to continue the parabola up, um, then I would do some kind of trailing stop. I would be looking for, I'd mentioned this last live stream, I'd be looking for, whoops, I'd be looking for divergences to start forming again, because obviously these divergences wouldn't have worked in that case, so I'd start looking for divergences to form again to potentially start taking profits. So if we did do something like that, then you would be looking for something like that. Well, not like that. Maybe like this, where we make another high again, and then we have to make multiple divergences before coming down. So you get a lower high in the RSI, but then like higher highs in price, and then I'd be looking to potentially start taking profit somewhere around that area when that divergence started forming. And they seem to work kind of pretty reliably on Bitcoin, at least for short-term corrections. Like, you know, this divergence right here worked well for a short-term correction. That divergence right there worked for a short-term correction. And so you can see the move down, you could have shorted the first pullback and done okay. Move down, short the first pullback, you'd have done okay. Targeting the previous lows, you'd have done well. Multiple divergences here on the higher time frames, short the first pullback after the acceleration down, you'd have done okay. And so they tend to work out really well. You just gotta get used to spotting them. The problem is you know, the divergences are easy to kind of think that it's the major reversal, and so I fall into that trap too. A lot of times with these divergences, I'm thinking I'm catching the actual top, whereas it's not. You just end up making another divergence and it just keeps going higher. But you still can play a trade off of these divergences reliably. even if it's not the top. Does the A corrective, I'm trying to move this thing out of the way. Does the A corrective wave form a 1, 2, 3, 4, 5 structure as well? Yeah, the A does. Let me go to, if you go to Elliott Wave Guidelines, it's like the first thing right here, Elliott Wave Forecast. It shows you, it gives you a lot of like rules. I mean, it basically just gives you the basics through here. You can go to like the corrections. So section 5 right here is all the corrective waves. And so you can see typical zigzag is 5 waves for the A. B wave is ABC, it's a 3 wave counter move of that 5 wave. So it's basically a correction of the A wave. And then you have 5 waves in the C. So that's your typical oh, I didn't know I could zoom in. That's your typical zigzag correction right there. And there's many other kinds. And so when you hear me talk about flat corrections, there's 3 different kinds of flat corrections. You got a regular flat, which is one where you have the A wave, the B wave comes up and basically makes a double top, and then you have a C wave that essentially makes a double bottom with the A. And so that's a regular flat. What I end up seeing the most is either an expanding flat where the A comes down, the B makes a higher high to false breakout. This is what I thought was happening on Bitcoin. We get a false breakout above the previous all-time high, and then you come down in 5 ways to finish the C, making a new low below the A. And that does happen pretty frequently, especially on lower time frames. When you get good at spotting them, you'll see them happen quite a bit on lower time frames. Running flat is another option that could have happened, where we false break out above the previous all-time high for the B wave, and then come down and make a higher low than the A with the C, and then that's a very bullish correction. That's probably the most common pattern in parabolic moves, because the correction is just so bullish that the B wave has to make a higher high, and the C wave can't go below the A because it's just so bullish. That's one of the more common ones in parabolic runs, and so it's good to get used to spotting these too, because one thing to note with these is you'll end up with a hidden bullish divergence. And so what that means is, C makes a higher low than A, but the RSI is actually overextended, so the RSI makes a lower low even though the price makes a higher low. And that's considered a hidden divergence, or a hidden bullish divergence, which I could probably find an example of if I'm looking here. This was actually one right here. That was a running flat right there. It's either a running flat or a triangle, but you see how we came down for the A, made a new high. It was a false breakout. It's very common, it seems like, when it grinds up like that, especially when you have divergences for Bitcoin. And then you come down in a C, which was kind of like a, to me it looked kind of like a diagonal maybe. I don't know. I don't know how you denote that, but it looked kind of like a diagonal for the C. And if you notice, we made a higher high or a higher low between the A and the C, but the RSI essentially made a double bottom. So a double bottom or it making a lower low in the RSI would be a hidden bullish divergence to me. So you can see that the price was strong, but the RSI was actually overextended to the almost going down to oversold again. And so that tells you that even though there's so much strength, it's not pushing it to a new low, and so that hidden bullish divergence structure starts to form, and it's very typical in a running flat like this. Technically, didn't we make the C wave on the expanded flat on this drop? No. An expanding flat would have been like that. It would have been a structure that looked a lot like that. It gives you kind of like a, it gives you like the bull, or what's it called, megaphone type pattern, where the C would have taken out this low right here. Whoops. The C would have taken out that low of the A right there, which now that we're flagging, I don't think that's likely, because we would have looked something like this, and then it would have been, you know, a very bullish correction. Still, even if we did that, it would have been a very bullish correction. This is even more bullish because we haven't broken down yet, but that's what I've been looking for on an expanding flat, which would have been really nice to buy below that low right there if it came, especially still being above the 21 week EMA. But that's what I'm looking for right now, though, because this looks very flaggy looking. So that's what I'm going to keep my eye on. Until anything happens here, I'm not doing anything. I'm just going to continue to trade the lower time frames because there's just no decision made yet. And if I put these EMAs back on here, you know, we're above the 21-day EMA. Really nothing to get too excited about right now until we break out of this structure, this corrective looking structure that we're in. Well, I think I'm going to end it here. There's only like 3 minutes over, but I'm going to upload this video to YouTube for anybody that joined late, and or if you want to watch it later. So I appreciate you guys jumping in. We'll do the next one next Monday. So I'll see you guys next time.